WeWork IPO is finally happening! This and more on today's Invest Roundup. Hey guys, it's Terry and you're watching another episode of Invest Roundup. Watch out! Ray Dalio said we're halfway through a stock market bubble and apparently it is going to be of the dot-com era proportions. Things are intensifying at Amazon as votes come in and Bernie Sanders joins the Union Drive in Alabama. On the upside, Ever Given, the ship that was stuck on the Suez Canal, is finally free! So that's at least one good news, but let's get into more good news, eh? Here's the usual disclaimer. Whatever stock or news we talk about is not a recommendation to buy or to sell. These are all just news we deem important, things we believe you need to know if you're invested in the stock market or if you intend to invest. First news item, we talk about the freshly listed second-hand clothing platform, ThredUp. Like Barney Stinson would say, suit up. Except in this case, it's ThredUp. The used clothing store chain debuted on Nasdaq last week at $14 per share and shot straight for the moon. So by the time the market closed last Friday, it was at $20, up by 43%. Boy, it feels like we're talking about a new IPO every week now, aren't we? In fact, the faith is so strong in this company that they are backed by a lineup of venture capitalists and 9 big banks like Goldman Sachs, Morgan Stanley and Barclays. So, what's the play here? How is this clothing company any different from the ones out there? Well, ThredUp is an online resale marketplace for clothing as opposed to your regular online shopping platform which only sells new pieces, or sites like eBay which sells virtually anything. ThredUp is where consumers can buy and sell second-hand clothing, shoes, accessories, and at the moment they feature about 2.4 million listings at any given time. The COVID pandemic has also driven growth for the company in the last year because that was when everyone was looking to save and sell whatever they can. Legally, of course. According to the founder, the company is looking to capitalize on a growing market for second-hand goods, which is projected to fetch $64 billion by 2024. There is also a growing number of millennials and Gen Z folks that are actively shifting to second-hand now, which makes ThredUp all the more confident they'll be around for a long time. According to the founder again, with the world still in a recession after the pandemic, and with the growing number of green initiatives that are coming around, he had no qualms that more people will start to focus more on shopping sustainably and platforms like his will grow in popularity. The company is following the footsteps of its competitors Poshmark and The RealReal to go public, and they already have 21 partnerships with big names like Gap and Walmart to help them expand. Based on the company's filings, ThredUp has a market value of $1.27 billion at the moment, but it is worth noting that even though the company brought in $186 million in revenue last year, they've been experiencing net losses in the last 3 years, each more than the last. Second news item, Automotive supplier BORGWARNER shifts into EV business, but they may have been a little too confident with their announcement last week. BORGWARNER Inc., one of the biggest suppliers for car parts in the world, announced their big EV plans last week, only for it to backfire and cause the share price to go right off the cliff. Historically speaking, the company has had a pretty solid business performance. Right off the bat, they are one of the 25 largest automotive suppliers in the world, and they are the leading manufacturer of turbochargers in gasoline-powered vehicles. And as you can see, they're not big on growth, but they make up for it by being a great dividend company. They're also quite popular in the stock market. The stock was up by 23% over the last 3 months and delivered a 27.54% return for invested hedge funds. Sadly, it didn't bode well with investors when they say they are moving away from their current business last week. In last week's presentation, the company said they are prepared to shift their business to electric cars to follow the footsteps of their biggest customers like Ford, General Motors and Volkswagen. They also aim to boost their EV-related revenue from the current 3% to about 45% by 2030, and they intend to sell off parts of their internal combustion engine business. Hearing this, investors were not happy and intrigued, an 11% slide in the shares up until last Wednesday, which is the steepest drop since June. Some analysts also said that BORGWARNER was underperforming in the strong market and the company is still playing catch up, which is a nice way of saying they're not quite there yet. The people at BORGWARNER, however, is not too bothered by the share price dip because, I quote, "their margins and financial performance have been strong." And boy, do I hate it when these people are right. The share price bounced right back up on Thursday and it looks like it's been on an upward trajectory since. BORGWARNER said on Friday that the company hopes to have nearly 50% EV-related revenue within the next decade, and they're also planning to spend roughly $8 billion between now and 2025 to grow this business segment. At the moment, their stock, BWA, is considered to be a medium-risk investment. Before we go on to WeWork's IPO news, it would be great if you simply hit the subscribe button and turn on the notification bell. It will really help the channel out so we can bring you more market news every single week. And finally, after the fiasco 2 years ago, the controversial WeWork is finally going for IPO. Somewhat. Yes, it's another IPO, people. For those who can't recall or don't know what happened to WeWork's IPO before, here's a 20-second summary. WeWork was a 9-year-old company and they filed for IPO in August 2019, but investors and media were not happy with its financials and started questioning their business performance. Valuation fell from $47 billion to just $10 billion. IPO was then delayed to September 2019. Public started zooming in on the founder, Adam Neumann. Neumann was then removed from his position for his work ethics, and the company's biggest investor, SoftBank, took over in October and 2,400 people were laid off. Wham bam, this IPO fell apart and the whole thing was delayed indefinitely. And now, 2 years later, it looks like the company is ready to get back on the road. Except this time, they're saying screw it to the traditional IPO route and doing this whole thing through an SPAC merger instead. Remember us talking about SPACs before? SPACs are blank check companies who attract investors to invest in their IPOs while they look for companies to merge with. So by extension, this company they merge with is also a public company. Think of it like how hermit crabs and the shells merge to become one entity. This trend is apparently all the rage on Wall Street now since the pandemic started, and this is how WeWork is planning to do their IPO. They're currently in talks with BOX Acquisition Corp, a SPAC listed on Nasdaq for a deal valuing around $9 billion including debt. If this goes through, it will also mean that WeWork can then be less dependent on SoftBank for funding. Now don't get me wrong, I think this all looks great for WeWork, except when it comes to business performance, it's still a little Putting the incidents from 2 years ago aside, the pandemic sort of gave WeWork another kick in the groin last year and the spaces became ghost towns overnight, which made them lose another $3.2 billion. But investors are taking comfort in the fact that the boss is no longer Adam Neumann, but a much more experienced former executive, Sandeep Mathurani. The new management is also planning to tweak their business model to meet post-pandemic demands for flexible workspace and is projected that the occupancy rate would reach 90% by 2022. Of course, there are investors that are also still skittish when talking about this company, but in general, this news has received a good response from investors. Since the announcement of this possible merger, the share price for BOX has jumped more than 20% to $11.71. So, those are the 3 important investment news we had to share with you this week. Once again, we encourage you to get more information if you'd like to act on any of the companies we shared about earlier. Comment below and tell us what you'd like to see on the next Invest Roundup and share this video with your friends, especially those who are invested in the stock market. We'll see you next week.